Welcome to the Mainstream Mortgages Podcast. My name is Peter Paley, and as always, I'm here with my two business partners, Derek Vandell and Colton Boudreau. And today's topic is mortgage renewals, mortgage switches, and mortgage transfers. And it can hopefully be an excellent episode full of good information for all of our viewers. And so let's just do a deep dive in. So, Derek, tell me what a renewal is and what options a client has when their mortgage renewal comes up.
Yeah, so at the basic level, mortgage renewal is when your current term expires at your existing lender and it's time to renew into a new term. So the different options would be to either renew into one of the options that are given to you by your existing lender, or you could look for different options with a different lender.
And why would somebody want to change lenders?
The most common reason is for rate. There's another reason sometimes if the current lender maybe didn't do as good of a job as you had hoped or kind of rubbed you the wrong way, you might be looking for a different lender in that reason as well.
So, Colton, let's talk about someone's coming up for renewal. What are the most common mistakes people make when they're handling their mortgage renewal?
Yeah, so I would say number one is simply signing the dotted line or clicking the accept button in your online portal. Doing no due diligence and just settling for your current lender's renewal rates is oftentimes going to cost you a lot of money because we've been finding that lenders typically don't offer the most advantageous rates right off the jump to clients in hopes of them signing for a higher rate and obviously making more money. And the second biggest one I would say is just waiting till the last minute to do your renewal, to get to look at options to get the ball rolling. Because typically speaking, on our end, it takes about 4-ish weeks, give or take a little bit more, a little bit less, to have everything in place. So if you're waiting till, a week prior to your renewal date, like you should have been started a long time ago.
Okay, so we already know that most lenders are going to not give you their best offer on your first renewal notification. We also know that people sometimes put things off right till the last second. So, Derek, tell me when a client or a homeowner should start thinking about their mortgage renewal.
I would say the best time to start thinking about it would be 6 months, half a year before your maturity date. And the reason for that is because you might have different life plans that could be changing, and that could change your strategy when it comes to your renewal for your mortgage. That being said, we can usually lock in your renewal rate up to 4 months before your maturity date. So 4 months is a good time to actually get the ball rolling and get into action.
And so, Colton, when switching your mortgage at your term maturity or at your renewal date, what fees will the client have to pay?
So typically speaking, the lawyer's fees will be covered. So we have a service called FCT or FNF. Those are covered by the lender, and typically it's about $700, but you don't have to worry about that. Um, the main fees that you would have to worry about is one is any discharge or assignment fees. Those are typically $200 to $500 on every mortgage, give or take your lender, of course. And then any interest fees, or if there was a property tax holdback, anything like that would be included. But those are the main things to look for to be worried about.
So the lender's going to pick up the legal fee. They're going to
Mhm.
pick up the discharge fee from the province, but
Province,
the client's still going to be responsible for any administration or discharge fee from the lender or any like
correct.
little tiny minutia that the lender may have,
Yeah.
which we find out ahead of time. So let's switch from renewals to midterm transfers. I think this is a really underutilized option for many mortgage holders. Like many people don't realize if they're in a 3, 4, 5 year fixed term that they can switch midterm. Yeah, there's going to be a penalty charge, but if rates are low enough and the penalty's low enough, it can make a lot of sense. So, Derek, can you tell me um, why somebody would explore this option to do a midterm transfer?
Yeah, the biggest reason is rate. If you're in higher rates, like anywhere from right now, 4.8, 5.2, somewhere anywhere above that, then chances are really good that it would make sense for you to do a midterm transfer, even though there may be a penalty for you to switch lenders. getting a lower rate can offset that whole penalty and make it make sense for you.
So Colton, again, since you're the fee guy today, what fees or what happens to the penalty and what options do people have to try to limit that blow when it comes to making a midterm transfer?
Yeah, so on a midterm transfer, lenders allow you to cap 3,000 of the penalties or the fees into your mortgage. So let's just use simple math. If your mortgage balance was 200,000, you could go up to 203,000 for your new mortgage. And anything remaining after that $3,000, you would pay out of pocket. But like Derek alluded to, it might make sense if the rate's that much lower or it's saving you that much money monthly, annually. It's not a bad idea to look at your options and maybe just pay that extra $1,000 or $2,000 to get the lower rate and save money over the term.
Yeah, so real life example, like we're just finishing up a file right now where the client has 3 years left on his mortgage. His rate's 4.99% from back in the day when that was an excellent rate, but we were able to get him a new 3-year term at 3.89%. He's going to have a $5,400 penalty. 3,000 of that's going into the new mortgage we've set up. He's elected to pay the 2,000 out of pocket plus the lender's just discharge fee of approximately $400, but the savings in total for him just in interest are closer to 14,000. So even though he's gonna pay this 2,500 out of pocket, it's gonna save him $14,000 over 3 years. So like it was really a no-brainer for them to make that decision. And especially with the way things going are in the world, like a couple $100 a month, I think his payment was $200 a month lower. That's going to go a long way to buy more groceries or heat the house. Like things have just gone up so much lately. So um, what else can we do during a midterm transfer? Like everyone's maybe stuck in their head that it just has to be a mortgage. And then go back to Colton with this because he just did a file where that's where the client was able to transfer his mortgage over and add a HELOC. So tell me about that experience and why that was beneficial for the client.
Yeah, so we have the ability to, one, if you're looking, first and foremost, I should note that if you have enough equity in your house, you're able to do this. So he had an insured mortgage, or if you have an insured mortgage, you can switch over that mortgage that said best rate to a different lender, and they can add a HELOC behind it in second position, which opens up, more options for the client to either buy a rental property or even pay off debt with said HELOC, right? Which is really, really optimal because the rate's lower than what your credit cards or your other unsecured lines of credits would be.
And I just had that file where the client was up for renewal. The renewal rate from his institution was terrible because he had a conventional mortgage. And we had that product. We were able to transfer the mortgage over at the basically the insured rate and then
Mhm.
put the rest of the balance that was owing on a line of credit. So instead of him getting 4.5, he was able to get 4.14, which is a huge savings. And he had a HELOC and he just had to move a small little balance over there. So it's a real win-win-win for that client. And Derek, I'm lobbing you a softball here when somebody's renewing or thinking about a midterm transfer, why should they use a mortgage broker?
Honestly, I'm having trouble with this one. I don't know. No, obviously, a mortgage broker is going to look for the best solution for you, not just the best rate. Yes, but obviously the rate is the biggest thing, but we're also going to ask you questions. We're going to say, hey, what's your plans for the next 5 years or so? Does it make sense for you to maybe add a HELOC? Do you want to maybe roll your car loan into this renewal? All these different things that you might not think of if you just had signed on the dotted line at renewal time, right? So not only are we going to save you most likely a ton of interest, but we're also going to save you a lot of headache, hopefully as well.
Or offer peace of mind if you have something that's already really good for you and your family.
Mhm.
Just because you ask us a question doesn't mean we wouldn't recommend staying where you are, but we would
Yeah.
do our best to um, save you a little bit of money. So for me, I think there's I just sort of want to plug our budget episode, which was a few episodes back, because I really think people put their finances off too long and they should do a household budget and start reviewing these things like their mortgage, because like there really is a cost to doing nothing. If you don't know or don't look or don't double check. And I mean, we're not talking hours of your time, it's just like minutes of your time to just double check and ask the question. We're here to always help. Like, did you guys want to add anything else to the renewal transfer episode?
Not this time.
I would just say again, don't wait till last minute.
Oh, wait.
Get ahead. Yeah, get ahead of things, and we're honest. And if you've got a good renewal rate, we'll tell you that, but we'll keep checking in to see if our rates dropped, right? And then maybe we can help you. And if not, we stay in contact throughout the term. And like we alluded to, midterm switches are a thing, right? So we might be able to help you then.
Great. So thanks, guys. As always, this was a really informative episode. To anyone watching, if your mortgage is up for renewal or you are maybe still have one of those 5% plus rates from a few years ago. I mean, they're as high as 6.25%. Let's see if there's something we can do or if it'll make financial sense. At least we'll give you the peace of mind. You can always contact us at by phone or text at 431-482-2187, by email at greatrates@mainstreammortgages.com, or visit our website at www.mainstreammortgages.ca. Thanks for watching today.
Bye.